this is Lucid Totality, and I'm Leah Wald here with Tyler Jenks. It's January 26th, and today we're going to talk together back and forth about HODLing and our beliefs on what being a HODLer actually means, especially in regards to the fact that we believe in financially trading Bitcoin as well as other cryptocurrencies. So to start it off, I'll start just by saying my own personal belief, which is that, first of all, I do believe that Bitcoin is king. However, I will also say that I truly believe that Bitcoin, altcoins, and the current blockchain are absolutely still in their infancy, which is beautiful because you have a huge trajectory and opportunity for everything to continue to develop, which I don't even know what the future of Bitcoin, blockchain, and this entire ecosystem looks like, which to me is very, very exciting. However, that also has a lot of ramifications when we talk about finance and understanding what Bitcoin actually is, especially in regards to the white paper that Satoshi originally turned out, which was saying Bitcoin, a peer-to-peer lending system. So with that said, I will turn it over to Tyler and we will continue this dialogue.
Hello, everybody. Yeah, this is a really interesting topic to me. And I've got to say that it has always rubbed me the wrong way from the first time I heard people talking about it, almost implying that anyone that didn't do it was not only making a big mistake, but was probably a fool. And I think the discussion has been more nuanced, but that don't really understand what the whole discussion is about. I'd like to start from my perspective, which has been 40 some odd years helping people manage their assets. There's a thing in asset management and finance that's just called buying and holding. And what that means is you cannot really time the market, so don't try. That's one of the implications. But the more important implication of buying and holding is you have all of the statistics and the probabilities on your side. And that is absolutely true. Since 1926, the S&P 500, on average, 2 years out of every 3 and steps back. Now, sometimes it goes up 3 years and then steps back for 2. Sometimes it goes up for 4. Right now, we're in one of the longest S&P 500 expansions in history. And therefore, you don't really need anything but HODL or a HODL or a buy and hold, because you have an asset class that has proved itself for a century, and trying to time it has been very difficult, but I will talk about that in just a minute. So from my perspective, the fur on the back of my neck goes up a little bit when I hear someone, particularly someone in a position of influence in the ecosystem, the crypto ecosystem, insisting that people do as they do. And we'll talk about that in just a bit. Leah?
Yeah, absolutely. I guess it also comes back to me and rubs me in a certain different light, which is that the beautiful core developers that started working and continue to work on developing, again, bringing it back to the vast opportunities in the space for Bitcoin to develop, very much understood not just what Satoshi was saying, but on his theoretical level, not just the guts, I should say, the guts of what's being built by building it themselves with the code and everything, but also theoretically the opportunity that Bitcoin has to really disrupt in an incredible way the financial system that is highly flawed. With that said, with the new developments, what worries me with people who are self-proclaimed hodlers, and again, if this is your financial strategy, you know, we all have our own risk tolerance and our own understanding of finance, and not everybody is a trader, and so therefore that could be your strategy. However, what does worry me is if hodlers truly understand with the new developments, with forks, with hard forks, with soft forks, with everything that's coming out, with everything that may come out in the future, due to all these other economic factors, financial factors, now that we're listed in the, you know, that Bitcoin is listed on CME, CBOE, that we have GBTC, that we have other potential ETFs down the pipeline. Is everyone truly understanding what that strategy is and how that will affect them and their hodling strategy or their Bitcoin, the underlying asset, when these market forces and things happen? And I think that therefore there's a real danger in not understanding not only how you can and should be potentially trading Bitcoin, which also provides liquidity in the markets and more of a validity, but just also if everyone's ensuring that they're understanding what the real thing is, what Bitcoin really is, what Bitcoin is becoming, what Bitcoin was from its very original roots in the white paper, as well as obviously the underlying blockchain tech. So that's my current concern when I hear everybody and all their cheerleaders say, just hold on for dear life, because I worry if that really, I'd say, causes stagnation in cognition of really trying to understand what Bitcoin truly is, and therefore understand what it is that they've bought. Tyler?
Very interesting. Yeah, very interesting. I believe there are three groups or three categories of people that are currently hodling, and the first group are, in my mind, they understand what they're doing. They've been with this project, if not for the full 10 years, for a very large portion of it. Number two, or point two about that first group, is many of them understand the code. They understand the language. They understand what's in this mysterious thing called the blockchain. But most importantly, this first group understands the concept from a financial, political, moral, possibly ethical, probably point of view, and have thought about it for many months, if not many years, and have come to the conclusion that this is an answer, and it's the only one that has really been brought to the fore for many, many, many years after the end of the gold reserve. So my hat's off to that first group. But when all is said and done, even with that first group, their final decision is based on faith, F-A-I-T-H, just as in religious faith. You go so far with knowledge, you go so far with the facts, you go so far with your understanding of those facts, and then you draw a conclusion based on faith. I suggest that everyone in that first category is basing the conclusion to simply hold regardless of what on faith. And it might very well turn out that they're right. The second group are those that have made money last year, this year, 3 years ago, 5 years ago, don't know anything about the code, don't really understand that much about blockchain, except conceptually a little bit, but don't know what the guts are all about, what it can and can't do. But they've been successful. And based on that success, which is pretty easy to come by when an asset class is in what I call a hyperwave, it's almost impossible to screw it up until it no longer is. This second group that has made money has a belief. It's not a faith, it's a belief that every correction will be followed by higher highs. That's not faith, it's a belief because of their experience. I'll keep my hat on to that group. I'm not going to tip my hat to that group. It does not make sense in terms of finance. You need part of group number one to be part of group number two before you can get a tip of the hat in terms of what you're trying to accomplish. The group I worry about is group number three. Because group number three for group number one, there's 10 in group number two, and there's 1,000 in group number three. And those are the people that are being persuaded and encouraged by the people in group number one and group number two, and don't really have the experience other than to join those that are in a position of influence and hope for the best.
Yeah, very interesting. Yeah, this is totally. Also, I will apologize for all the chewing. This would be my Rhodesian Ridgeback puppy on the ground here, who eats absolutely everything. So one thing that comes to mind for me in just watching people's public opinion about talking and cheerleading the idea of hodling is Mandelbrot's fractaling and the misbehavior of markets specifically, which is that a fractal is really a geometric shape that can be separated into parts, each of which is a reduced scale version of the whole. I'll keep it at that for now. It can be used in nature, but it can also be used in understanding finance, in that there's sometimes just in finance, and there's other obviously brilliant economists as well, like Schiller with animal spirits, that you can't always explain market crashes, specifically for Mandelbrot's fractaling. They shouldn't statistically happen with the financial formulas that we currently have, with CAPM, with, I won't go into all of them. It's just within the equations that we have, it can't explain scary big events that have happened with various flash crashes in history. And a lot of that has to do with the fact that events are dependent upon each other, not independent. And therefore, as people have differing beliefs, as exchanges are, having issues, as countries are starting to have, new regulations, as people are starting to have other opinions that are not that of a hodler, when new traders and very sophisticated investors are entering the market, that therefore are able to influence the markets with very loud voices, it changes the game. So where I see hodling being very interesting in everything that I'm saying here is that it's a stabilization, and I see that, and I can feel that when prices fluctuate with the volatility that Bitcoin has, as well as the other other altcoins, which is just insane volatility. There's a real importance on having a stabilizing factor, an understanding that I'm going to use not hodl. I'm going to hold on to this because I believe, as Tyler said, in this asset. I believe in Bitcoin. I believe it's going to specifically continue to raise in price, in value moving forward. And that does make sense from just a stabilizing psychological perspective. However, it doesn't make sense on prudent trading strategy, in my mind. Tyler?
I would agree completely. From all of the things that you were just discussing, which are sort of the outliers, sometimes the black swans, but certainly the tails of the curve, but also just the essence of buying and holding never made sense to me. It does make a lot of sense on Wall Street for a lot of people. A lot of them tend to be marketers, though, as opposed to analysts or traders. What I said before about the S&P 500, I think, is important. Number one, it's been around for a very, very long time. It's gone through depressions, and it's gone through wars, and it's gone through assassinations of presidents. It's gone through Republicans and Democrats. And throughout that long, long period, what I said is true. Basically, 1/3 of the time it goes down on average, and 2/3 of the time it goes up. That's a winning formula over a long period of time. And it averages something right around 10% per year compounded. The problem with that very well established 500 best known names in U.S. Corporate markets, the 500 stocks in the S&P 500, even with that, you have to break it down and think about it. In my mind, you cannot do what John Bogle and others have made a very strong case for, which is simply index into the market and just don't change. Don't try to time the market. I think in the last 15 years particularly, the notion that the market cannot be timed has become downright silly. The greatest market and security timers in the hedge fund world use algorithms which consistently, month after month, year after year, decade after decade, consistently far outperform buying and holding. So yes, that's anecdotal, but it shows that the technology is available in order to make intelligent decisions about when to get in and when to get out. Not for mom and pop and John and Jane Doe in Des Moines or in Petaluma, but for people that take the time every day to think about all of the various supply and demand functions that are going into markets. In any case, going back to the S&P 500, and now we're contrasting this to HODLing a brand new 10-year-old, highly volatile, unproven, and very low adoption at this point, new asset class that I and others have found respond very well to analysis, technical analysis in terms of timing. But even with that, when compared to those asset classes that have been around and proven worldwide by all types for a very long period of time, the average of going up 2 years and down one, or down 1/3 of the time and up 2/3 of the time, is only an average, a mean, a median. You can go through very long periods of time, from 1929 to 1953, 1929 to 1953, in which the S&P did not go up. Yeah, it went up and down and up and down and up and down, but it never until 1953 got it above the 1929 high. You can go through periods like December of 1965 all the way until 1982 with the Dow Jones Industrial Averages not going up at all, starting at 1,000 in December of 1965, and 17 years later not have gotten any further. And NASDAQ in the year 2000, and not get back what your purchase was at 5,000 NASDAQ until 2 years ago, 15 years later. Well, if that's true in some of the biggest, most liquid markets in the world, then why should we, through faith, believe that this new asset class is going to be different? That number one, you couldn't or shouldn't get out when there are clear indications you should, and then get back in when there are clear indications that you should. And number two, there is a thing called a hyperwave that we are introducing on our channel here through vlogs starting probably tomorrow, that I've studied for 40 years, that it's a subset of a study of bubbles or parabolic moves. And but it's a subset. Bitcoin meets all the criteria for that subset called a hyperwave. In my opinion, as the founder of Hyperwaves, and I'm the one who named it, and I've studied it for 40 years, and I've found over 200 of them now, going back 300 years, not a single one that I have studied has done what HODLers believe Bitcoin is going to do now. And I'll explain that in future vlogs. But so because of all those reasons, I come down on the side of buy at the right time, hold it as long as you can and is prudent in your mind, according to your finances and your understanding of this ecosystem. But when you become convinced, through whatever methodology you're using, that profit should be taken, do not be embarrassed or do not be intimidated that you're acting foolishly. I don't believe you are.
I agree. In the end of the day, also, what I think about is that Bitcoin is tiny in relation to global commerce right now. It's growing, but it is still very small. And again, if hodling is a state of mind in the belief that Bitcoin's value will continue to increase in the future, then I do believe in that. And I don't think that it doesn't make me, in the common understanding of hodling, not a hodler, that I do believe in prudent trading strategies and that I trade with it and that I use it as a currency and means of exchange. Quite the opposite. I do believe that trading and understanding exactly what Tyler just said of when and how the markets are currently reacting, how people are reacting, that it's the belief that we should be following it, that we should be understanding it further, that I value it as from the revolutionary aspects of what it has to hold, as well as it being an asset, as well as all the other opportunities that have been explained by some of the foremost thinkers, Andreas Antonopoulos, the technical analysis done by Tone Vase, the brilliant programming explained by Jimmy Song, and many, many others. And I believe that, again, that it's by truly understanding and continue to understand how other people, and therefore supply and demand in the markets, are also viewing Bitcoin, and therefore utilizing that understanding not only to trade and therefore be actively involved in that community, but also then understanding what needs to be further developed, what needs to be changed. Why are these forks happening? All the different insane amount of news that comes out every single day about Bitcoin is good. As long as we are all taking the time, and if we truly believe that Bitcoin's value should increase in the future, then we should take the time to truly understand why these events are happening and how we can therefore further increase the value of Bitcoin, and that's not by being complacent. And that's my view.
Well, that's great, and we can conclude with that, but I'd like to just throw one other thing out. We have some incredible individuals in this ecosystem that are highly talented, that fly in the face of common wisdom about what can and can't be done in finance. I'll just name one right now, who I have not really followed until recently, but the more I do, the more I read some of the things that he has written about and tweeted in the past, the more impressed I am. And there are many, many others, but Peter Brandt and his incredible track record over many, 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 many years, over decades, conclusively, that the ability to not only beat indexes and markets and stay out of trouble at the right time by wide, wide margins is doable, and he's willing to teach about it, as are so many of the others that have moved into this ecosystem with great opportunity. So I simply encourage everybody to look at this concept of buying and holding by either faith or by perceived wisdom for what it is. It might very well work out, but for the vast majority of people, be very, very careful with the concept. Thank you very much, Leah.
I think that's it for now. Definitely leave us comments and questions below. I can imagine, given how controversial this topic is, that people will have varying beliefs and ideas, and we would love to hear all of them. So thank you for watching. Thank you, Tyler. And until next time.